Hello everybody, this is Brian Downing from quantlabs.net. Got an introduction to Mike Barna of Trading Systems Lab. He's got our presentation for us. Take it away, Mike.
Okay, Sammy, you are not too early or too late. We really haven't even gotten started yet. Welcome everybody. I'm assuming that you can see my screen quite well here. I'll leave it as this outline presentation. I kind of like to know what's coming next anyways. Well, welcome to Trading System Lab. My name is Mike Barna. I founded Trading System Lab, which was an outcropping out of a trading environment that I came from and a consulting environment. I used to be one of the directors of a hedge fund called Regency Stocks and Commodities, which was a hedge fund based out of Manhattan. It was formed in part because of the success that we had with some early algorithms that I wrote back in the 90s, one of which was called RMESA, which combined maximum entropy spectrum analysis and the R-breaker kind of adaptive pivot point algorithm. It was very successful, and the profits that it made allowed us to start a hedge fund, which I was responsible for the mechanized allocation within the fund. I managed money for a total of about 7 years. I've written some pretty good systems that are still tracked today, like Big Blue and RMESA and Mesa Bonds and Mesa Notes. I came from the defense sector. Rockets, ramjets, missiles, lasers, spacecraft, aircraft, that's the world that I lived in for many years. Got out of that at an excellent time and got into this back in the late 80s. I also have a dozen FAA pilot certificates, and I still fly today. And my other passion happens to be competing in indoor four-wall handball. And just Sunday, I won the United States Indoor Four-Wall Handball Championships in my age bracket up in Anchorage. So here's the brackets, and for those of you that are sports nuts, I compete, and so that's my other passion.
Congrats, man.
So we've got two teams, basically, two team leaders on the TSL program. Myself, which heads up TSL, and Frank Francone of Register Machine Learning. So we are the only trading strategy design company that I know of that actually has a machine learning company as its partner in the development of a platform. And RML is a world-class machine learning company. They're the ones that present at the Gecko conferences. They're the ones that have 1,600 citations of their work. And Frank is one of the authors of the leading university textbook on machine learning. It's part of the Morgan Kaufman series on artificial intelligence. And you can pick it up on Amazon. Just Google his last name, Frank Cohn, and I think the textbook is about $100. All right, so what is Trading System Lab? Our only product is the TSL Platform. It is a platform for the automated machine design of trading strategies, which include single market systems ranging from high frequency to low frequency, day trading systems, pairs, portfolios, and options. Today we're going to focus mainly on the medium frequency swing trading, directional trading systems for equities and futures. On our website, however, we have plenty of flash demos that are downloadable which talk about everything: day trading, pairs, portfolios, and options. So please watch those if you'd like. So with Trading System Lab, you have the capability of producing essentially unlimited orthogonal return streams. So you have to think about, what would you do if you had access to an unlimited number of trading strategies? What could you do with that kind of power? What would you do with that amount of equity streams. Well, obviously, you can decorrelate them, you can play money management games, you can produce a variety of portfolios of portfolios. You can do a great deal of work, but just getting good equity streams can be a big problem. Our base approach is that no programming is required, so our engine writes code. Another way to think of it, it's an algorithm that writes another algorithm. It's code that writes code. In this case, the code is a trading strategy. We're agnostic to the time frame, so we can work with order book data, we can work with monthly data. 1 minute, 2 minute, volume bars, tick bars, case, CAGI, Renko, range, it doesn't matter what the time series is in, how it's normalized, as long as it can be brought into the platform, it can be designed upon, and code can be produced, and then that code can be dropped into a platform and traded. It's that simple. We have a lot of anti-curve fitting solutions employed. That's where we spend most of our time, is how to use this technology in such a fashion that it does not overfit the data. And as I said, we can design pairs of portfolios, options, day trading, high frequency, etc. Our clients range from small traders to investment banks. We just picked up a large hedge fund in mainland communist China, for example, that trades China commodity futures that are only tradable to them. And I'll tell you, that data looks very strange when we look at that data using our descriptive statistics modeling. I've never seen data like that. It's very dissimilar from the United States data or even other international data that we've looked at. We've got small and medium-sized CTAs as well, and a lot of individual traders. I'd say 1/3 to half of our clients are individual traders that are managing their own assets, perhaps less than 5 or 10 million of their own assets. We also have beginners to PhDs. So we're agnostic to the time frame, the market, as well as the skill level of the developer. I do work with some beginners. I also work with some PhDs, and obviously the work that PhDs can do with this platform, since it's entirely customizable, is substantially greater than that a beginner can do. However, a beginner can still use this engine to write trading strategies without having to know how to code himself or herself. You've all seen this disclaimer before. We're going to show some hypotheticals. We're also going to show some actuals, so I'll try to make sure I cover when we're doing both. All right, so I heard Microsoft was in the news recently. Steve Ballmer has been pushing machine learning pretty hard and says that it's the next era of computer science. We certainly agree. We knew this back 10 years ago when we first started developing TSL. Actually, when I first saw the engine become self-aware of its own trading and improve its own trading while it was trading in the simulator, and I saw the exported equity curves come out at such a fast rate, I knew that this was going to be extremely strong, and in fact it has been. Well, Ballmer, I don't think is a trader, but this gentleman certainly is, and according to him, his robots crushed human rivals last year. So there's a lot of interest in machine design trading strategies, but let's take a step back and talk, make sure everybody knows we're all on the same page. What is a trading strategy? Well, all right, so on the left we've got data, and on the right we've got an equity curve that is a time aggregation of profit and losses over this equity curve, shown as a growth or a decay of profits and losses. So we have red arrows that go short, blue arrows that go long. It can be both bidirectional or single directional. In this case, it's bidirectional. We have some kind of a release date. By the way, this is an actual trading system that was up for competitive ratings, and it was released here, and then it moved forward in time after that. Obviously, you want to see positive performance after it's been released, not negative performance, but this is the world that we live in. These are the equity curves, and we produce billions of these equity curves. Some code of an example trading system in a script language like TradeStation is shown here. This is a counter trender, if you will, that goes long only on the E-mini S&P daily data. This is the extent of the code. It's a very simple trading system, but it also doesn't perform very well. It's a rather weak performer. So you just saw a pretty good equity curve. This is a pretty weak equity curve. So designing strategies by hand, designing good strategies, costs a lot of money, takes a lot of time, and you have to have substantial technical knowledge in order to do it right. Most people that design trading strategies fail at doing so. Machine design trading strategies offer a lower cost per strategy, reduce time to implementation because the machine is writing all the code and doing all the testing for you, and you're now controlling a machine that has tremendous technical capabilities far beyond what you could do as a human. The brokerage companies are not helping you at all. They give you the ability to trade, certainly. They give you some code products to be able to write your own strategy, but the single thing that you need to be successful in trading the markets, they don't give you or can't give you because of legal reasons. That is a robust trading strategy that's easy to create. I mean, it's pretty simple, but they don't give it to you. You have to find it for yourself. And Trading System Labs' only focus is on creating good trading systems and writing the code. That's our only focus. So we're very different from the brokerage company. Okay, so my background is engineering. Engineers like to solve problems. What's the problem to be solved? Well, this is the way that I framed it back in 2005. We need to create a machine that automatically writes better systems faster and less expensively than humans can create using manual techniques. Better, faster, and cheaper are the three fundamental pillars of any systems engineering project, right? We want to improve all of those. Okay, so that's the problem. Let's take a little step back and look at some history here of how well machine algorithms have done relative to human trading. So this shows the performance of over a third of $1 trillion, of money under management as tracked by Barclay Hedge for mechanical system traders versus discretionary traders. And VAMI stands for the value of a $1,000 account after management incentive fees. So these are live trades. These are actual trades that have been recorded by money managers and submitted to Barclay Hedge for inclusion into their indices. Well, the systematic traders have had some problems lately, but the discretionary traders had some flat times too. They all started at 1,000. They're all ending up at about 8,000 or 9,000. So systematic looks a little bit more choppy than discretionary. But the real tell here in this data is here. There's $296 billion, a third of $1 trillion of money under management on the mechanical side, and far less than that on the discretionary side, right? Okay, so that's what's currently under management, but look at what's happened over time. The systematic traders continue to get money allocated to them at a rate of about 10 to 1 over the discretionary traders. The discretionary traders are basically being defunded out of business. So this is in line with what we see in the world in the move towards mechanical strategies, in the move towards machine learning and mechanical strategies, but it's kind of nice to see it plotted in that fashion. Okay, so we see three types mechanical strategy constructs. The first are the human design strategies, where the quant is writing out algol code manually, testing the code itself. The second type is predictive modeling, and these two are well covered in Masters, Dr. Masters and Dave Aronson's book, Predictive Model-Based Trading Systems Using TSSB, and Statistically Sound Machine Learning for Algorithmic Trading of Financial Instruments. But Dave admits that there's a third type, partly thanks to Trading System Lab, and that is the self-evolving strategy structure, which is a simulation-based optimization approach to the design of trading strategies. It's considered meta-heuristic, it's simulation-based, it's supervised learning, yet there's no supervisory signal. So somebody might say, well, how can you have supervised learning without a supervisory signal? Well, you can. It's called simulation-based optimization. It's single and multi-objective, and it's reinforcement learning as well. But we don't target a particular variable. There's no prediction here. It's all expectation, and you're probably scratching your head. So that's why I created this little slide here. So what's the difference between a prediction approach and an expectation approach? In the prediction approach, you have data, you feed data into a model, you do a prediction, then of course you have to find out if that prediction is any good by actually creating a trading strategy. Why do you have to take this important step? Because even though you may be 90% accurate on your prediction, if you lose more money the 10% of the time that you're wrong than you make the 90% of the time that you're right, the overall expectation of this trading strategy is negative and will lose money. So R squared and other predictive targets are not necessarily the best measure for the design of trading strategy. So in the expectation approach, the data, the expectation, and the model are all kind of connected together and self-evolve. And only then, when it's deemed good enough, is it implemented. So notice in the expectation approach, there's no prediction block like there is here. There's no prediction block. So this is the world that Trading System Lab lives in, and others live in as well. And we found this world to be superior to this world. So in the prediction approach, you try to predict something n steps out. Equity curves are then generated as an additional step. Good trading systems may exhibit poor R squared. Well, that's kind of strange. So if you're targeting R squared as your prediction metric, then you might be already upsetting the balance of designing a good trading system. So in the expectation approach, systems are viewed as objects, right? So we look at a system as an object, and the methods of those objects are the metrics of that trading system. Things like profit factor and MAR and profit to drawdown. All of those are metrics of that trading system. We can use objective function optimization and focus on one of those metrics. So we can ask the machine, just go and design me the best system that has the highest Sharpe ratio. Your percent accuracy might be 45%, it might be 75%, but you're not targeting just percent accuracy as the objective function. You're targeting, in that case, Sharpe ratio. And we've got 40 different objective functions, plus an external fitness function API that can be coded for customization of the objective function. So this is very different from the prediction approach. The backtesting model that most people are consuming is heavily flawed. It's not a proof of robustness. It allows for a high potential to overfit the data, and it can give you a false sense of returns. Why? Because you're backtesting in sample. And unless you're doing out-of-sample testing, a lot of out-of-sample testing, and we'll get more into that in a minute, you're setting yourself up for failure. And this is what the brokerage companies are helping you do, because they give you a great backtester, but they don't give you all the rest of the tools that are necessary to design a good strategy. So what can you do about this? Well, one thing you can do is sequestered data testing. Unfortunately, that takes many years. And in Trading System Labs case, we've taken 7 years and done the sequestered data testing and shown that the performance is wonderful. Well, not everybody has 7 years to play with, so how else can you work? Well, you do out-of-sample testing, you do differential market testing, you create some distribution and matched pairs, and do things like Wilcoxon, which rejects the null hypothesis that the out-of-sample matched pair to the in-sample was purely the result of chance. There's a good white paper on this. It's Pseudo-Mathematics and Financial Charlatism, the Effects of Backtesting, Backtest Overfitting on Out-of-Sample Returns by Marcus Del Prado and 3 others. It's a great read, and that's where we drew some of this information here from. So in the machine design trading strategies world, we see that ML algorithms can work in all categories, from the low frequency world, breakout patterns and global macro patterns. If you have the data, you could design a variety of very low frequency types of strategies, as well through the medium frequency of mean reversion and day trading and swing trading, etc., and into the high frequency world. Now, some of these special order type, NYSE API kind of HFT order book games, we haven't done a lot of playing with, but we can see the plugs that we can see, the receptacles that we can plug into and have the machine manipulate at this high level as well. And we would love to get into this, but we have to also focus where most of our clients are interested in, and we've got more clients in this category, in the middle category, than we do here, although we are looking very hard at some of these areas. So we see machine learning being agnostic to this trading frequency world. Obviously, there's different types of work and pre-processing to do in each one of these domains, but the workflow is still very similar. So in the machine design strategy world, the operator doesn't have to be a programmer. You're not limited to existing theory. Normally when we write a trading strategy, we start with a theory, we wrap code around it, we test it, we do parameter sensitivity analysis, we do some out-of-sample testing, and we implement it. Our Mesa, for example, took me months to write. A lot of hard work to create our Mesa, a program that Trading System Lab now can create in a matter of minutes, or certainly hours, versus months that it took before. So in 2007, we challenged any manually designed trading system to beat our machine designed trading systems in competitive third-party ratings. And we told people that we were going to enter into competitive third-party ratings at that time, but it was going to take a long time to do the testing on sequestered data. So how is the sequestered data testing performed, and why is it so important to talk about sequestered data? Well, at some point, you design a system and you freeze it. At that point, no more updates are allowed. You can't optimize, re-optimize the system. You're not allowed to tweak it. In fact, in third-party ratings, you don't even have access to the code anymore. You give the code to a third party, and they put it in escrow, if you will, and begin tracking it at some point in the future. So sequestered data testing is testing that's done in the future on an algorithm that was designed years past. So in our case, we submitted the strategies, the first few strategies for third-party tracking in December of 2007, for tracking beginning in 2008. And we submitted then again a few more strategies in 2010. They were everything was initially held for 18 months, then tested over that 18 months of data, rated and ranked according to 700 other strategies submitted by over 80 developers from all around the world. This is competitive rating. And by the way, if you rate highly on these lists, you will be flooded with business. So you want to have trading systems that are rated highly. This is a good first filter to see how well trading strategies do. Well, the results, well, These are some results back in 2013, and here are some 2014s. We're rated #1 across the board in multiple categories. And so how does this happen? How does a machine in 10 minutes outperform all of these other manually designed trading systems on testing on sequestered data? This is the first time that this has happened, and according to Futures Truth, there's essentially no other machine learning based algorithm company that's doing anything at all in these ratings. And by the way, if there's any other competition out there, they knew about this, and they certainly had the opportunity to submit along with us, but they did not even enter into the competition. We did. And here's the latest report from Futures Truth. If you go to their website and look at their latest reports, we're rated #1. In fact, we've got more top systems in the top 10 since release date, or top 12 months, than anybody. And we've only submitted a few systems to them. That's what's amazing. Here's the list of the systems that they're tracking. A couple S&P systems, a couple bond systems, a natural gas systems, a dollar index system. These markets have gone through some changes. Remember that in 2008, the world collapsed, right? The great financial disaster happened. The data moved in ways that it had never moved before. And yet we were being tracked in independent third-party competitive tracking. So there's probably no better acid test than a sequestered data test through the worst financial disaster of our time, and the Trading System Lab algorithms came out on top. This is pretty amazing, and it's obviously contributed to our success and the popularity of the platform. Okay, so that's kind of the background. So now we're going to build this machine. So we're going to start off, we're going to build this Trading System Lab machine here in the next 15 minutes. We're going to start off with a learning machine. So what's the best learning algorithm to use? Well, there's a lot of them out there. And you'll spend lifetimes going through these algorithms trying to find what the best algorithm is. And I spent decades looking at this. We were looking at AI, neural networks back in the late 80s, early 90s, and pretty much gave up on most of these approaches. Pattern recognition, self-organizing maps, bagging, boosting, random forests, you name it, we looked at it. Here's what I chose right here. It's the linear automatic induction of machine code with genetic programming. Why? Because it's fast, it writes code, and it's accurate. And it's also restricted and patented. So it's very nice to have a patented algorithm and exclusive rights to use those patents, and nobody else can come by and use your algorithm. Well, if you're done picking the learning algorithm, you still need to know a lot about statistics and statistical testing. Otherwise, you'll design a crummy package. So now you've got to become an expert on a whole bunch of statistical tests. While you're doing that, you might want to figure out what the best software suite is to use, and there's a lot of them out there. And again, you'll spend another decade or so trying to find the best software suite. And then let's not forget the language. So what language are you going to use to design this trading system? TSL is written in about 9 different languages, mainly C through C++.NET. But it also includes assembly code, because our strategies are evaluated at the machine code level in the registers of your CPU using the Intel instruction set. That allows us to do the evolutionary computing at the register level, which is documented to be 60 to 200 times faster than other higher level languages like C. So this is register genetic programming. That's what we're doing. It works at the fast CPU register level. So a little background on genetic programming. It is evolutionary computing. In other words, it goes through the path that a species goes through as it's evolving. It starts off simple. It adapts to the environment. It mutates. It crosses over. and it reproduces. Strong parents give birth to strong children. If the strong children survive, they're allowed to reproduce, etc. The environment that we expose this entity or these populations of entity to are the stock market or the futures market. And these entities are asked to trade that market. If they don't trade it well, they're erased from memory and re-randomized, and they're tried again. If they do perform well, they're allowed to reproduce. And reproduction gives rise to stronger children that then mutate, et cetera, et cetera. Ultimately, a strong trader emerges, and then code is written. And it's very different from a tree-based genetic program, which suffers from some serious limitations, like global memory, whether or not all nodes are accessible from all other nodes. Also, overfitting problems. It's also not a genetic algorithm. Remember, genetic algorithms do not produce anything new. The genetic program that we use produces something new, unique and novel. A genetic algorithm only optimizes what already exists. So it's considered supervised learning. We initialize a population. Trading strategies are initialized with random signals and random inputs. Then a tournament is run. We go through mutation, crossover, reproduction, and DEMS to enhance the geographical diversity. We compress the size of the program down to as small a size as possible using parsimony pressure. We want a simple trading algorithm a la the Occam's razor. After NGWI, generations without improvement, the run restarts. So that allows us to run up a global optimum rather than a local optimum. New trading strategies emerge and are proved based on the error function or the objective function, which might be Sharpe ratio. Algorithms learn to trade better, and you'll see this in the example I'm going to do in a second. After X runs, the user or user terminations, all run stops, then code's exported. So all this happens behind the scenes. It's about 1 million lines of code. It's very complicated, but for the user that controls the code, it's very simple. Evolutionary-based induction of machine code. This is where RML's patents come into play. In the older compiling genetic programming system, it was a two-step process. Your trading strategy is here in machine code, and it's evaluated in a two-step process. In the current machine code GP, it takes one step to evaluate and manipulate the trading structure through typecastings, through pointer typecastings to machine code instructions. And here's a white paper you can read that talks about the Disciplus code base on our website. Reproductive crossover is very interesting in that your trading strategy might have two parents. They give birth to two children of different sizes, which is important. We want our trading system to grow and shrink in size as it's being designed, right? You don't want a fixed length of a program, a fixed number of inputs, a fixed number of instruction sets. You want this trading system to be able to grow and shrink dynamically in size as it's evolving. This is wonderful, and this is covered in Frank's thesis. We have 34 instruction sets. That's far more than any other algorithm out there. One instruction set is addition. You need to tell the machine that it can add two things together, right? You can also eliminate addition from the instruction sets. But more advanced instruction sets like stack rotation and data transfer can manipulate the overall trading system and move it in ways that you could never do with another algorithm. So we can explore this huge range of possible solutions as evolution is taking place. The translation path of the code starts at machine code, gets exported into C code, and then up-translated to languages like C# and other languages. So it's a three-step translation process, and obviously there's plenty of issues here that we have to contend with in this translation process. Here's an example of an algorithm that emerged from the machine in C code. Notice that there's only 7 inputs. We start with 56, but all but 7 of them show up in the algorithm. Well, this is 12 lines of code here, if you will, 12, 13 lines of code, and it's a rather simple algorithm. So that's what we want. We want a simple algorithm to emerge. So why did I choose, when I had access to all of these machine learning algorithms out there? I told you a couple quick reasons why I chose the LAIMGP. I mean, after all, I could choose whatever I wanted to choose. I'm in a position to be able to choose whatever I want to choose. And I chose this algorithm because it's fast, it's accurate, it writes code, it's patented, and because of this, in part because of this. This is a competitive competition that RML had to run against other companies in order to get their government contracts. This particular study was to find buried, unexploded bombs. And Disciplus had to compete, RML, using the Disciplus code base, had to compete with companies such as Battelle, Naval Research Lab, Navia, Applied Physics. There's some pretty smart guys at Applied Physics. And here's Disciplus. Anything to the right up here to the upper right quadrant beats everything to the lower left quadrant. And here's the line of that's no better than guessing. So if you're on this line, basically you did as good as a guess could do. Well, here they are. They easily beat everybody. So this is good. This is messy, noisy, crazy data. And that's what we want, an engine that can find the signal in crazy data. Okay, that gets us through the learning machine. Now we've got to attach a trading simulator to that learning machine. So the trading simulator maps data to equity curves, right? We have data, we map it to an equity curve. There's some perfect, theoretically exact trading system at the top of a family of curves of solutions. You know, there's no closed form solution to the market, and the expectation equation has 3 unknowns, has 3 variables and 1 unknown. It's an unsolvable equation, but there's an infinite number of solutions to the theoretically perfect equity curve that lie underneath the theoretically perfect equity curve. There's an infinite number of solutions, and that's what TSL does. It produces these solutions, and here's some equations for the simulator. Aggregations of trades over time that lie underneath the theoretically perfect equity curve. Well, we have to start with some data, right? And that means that we should pre-process that data. Well, pre-processing is very, very important. You need to normalize the data. You need to extract out important signals, which means you have to have some degree of domain expertise. So, drawing from my experience designing trading systems over the past 25 years, I extracted out a lot of signal, a lot of data, and pre-processed our 56 inputs in very good ways that help the machine design better trading strategies. Things like adaptive channels, oscillators and variations and transforms and normalized variables, Booleans and non-Booleans as well. We can also accept other DNA, including things like commitment of traders data, social media data, order book data, fundamental data, intermarket data. If you can get access to the data, you can consume it in the engine. Remember, the data's also got to be available in real time. So it's one thing to get historical, but it's also got to be available in real time. This study we did on social market data, where we ran some studies and produced millions, hundreds of millions of systems without social media data and with social media data, and you can see the difference of the out of sample here without really knowing what these are. This just looks better. It's all above the horizontal here. I'll cover more of this in a minute, but we did show in various ways some improvement in the design of trading systems using social media data. So TSL can use 25 trade types. One trade type, by the way, is enter on a market. So that's just one way to get into a market. There's a lot of other ways to get into markets or get out of markets. And if you're not studying all of the ways to get in and out of markets, you're really shortchanging yourself, because it can make the difference between a good system and a bad system. We've got 40 fitness functions, including the external FF API DLL, 56 inputs, 8 outputs, so it's multi-input, multi-output. 11 risk size and stops criteria, 5 preprocessors plus 5 interday. These are all completely customizable. So if you have your own inputs or your own indicators or your own patterns that you like, that you think work well, bring them on into TSL and let TSL design strategies on them. Or not, you might find that they're really not that valuable after all. That's what most of our clients report as they do this kind of work. A few have been able to improve the preprocessors. And then, of course, there's EVORUNT. EVORUNT is a multi-run iterator that allows you to iterate over, for example, the trait types and design, say, 1 million systems using the machine on each one of the 25 trait types. Present yourself with a sortable grid that you can then go back in and drill into the particular trait type of interest. So you really don't know what trait type is good for your market without studying all of them, and that's what EVORUNT lets you do. Also, EVORUNT lets you look at various ways of looking at the data. For example, here we've got the S&P on the left and the wheat market on the right. And in these subplots, we've got a power spectral density, a correlation plot showing the movement of the market to hold a trend in the up direction shown in green, above the index, yellow, versus the ability or inability of the market to hold a trend in the down direction, shown in red below the index. So the S&P has a tendency to hold a trend 1 to 20 bars into the future in the up direction. 1 to 20 bars in the future, they're all above positive, so the S&P holds a trend 1 to 20 bars in the future, and this is basis a 5-bar EMA crossover signal. That's a signal. It doesn't hold a trend in the down direction, but look at wheat. It's completely the opposite. And by the way, this is just the recent downtrend. This wheat market goes back some 20 or 30 years. So the wheat market has a tendency to hold a trend in the down direction, but doesn't hold a trend worth a darn in the up direction. So knowing this asymmetry in the movement statistics of your particular market, why would you want to design a symmetrical system? You would clearly not want to, knowing this. Now, some of the China data that we looked at holds trends in both directions. In other words, the green is strongly above index and red is strongly above index. We've never seen that, or we rarely see that in U.S. markets. So this is what EVORUNT does. It iterates over trade type, fitness function, preprocessor, max trades per day for the day trading work, and bar size. So you can, for example, set up a run and look at various bar sizes, say ranging from 1 minute to 100-minute data, and it will design, say, 1 million systems at each one of those minute granularities and tell you what is the best time frame to use in your design. We found some rather interesting signal-to-noise peaks occurring on intraday data, and I'm talking about consuming 500,000 bars or so of data. So it's important to know what the best time frame is to trade. Now, this could be 1,500 tick data or 5 range bar data or whatever, but you can use EVORUNT to find the best bar size to use whatever you're doing. So that's what EVORUNT does. All right, so that gets us through the trading simulator. Now all we have to do is add a bunch of other things like a fitness evaluator to it. Well, fitness can be multi-goal. So fitness, we can crank up the net profit, we can crank down the drawdown, crank up percent accuracy, up profit factor, up average trade, and run TSL, and guess what? Find no solutions. Why? Because if we over-constrain fitness, you simply can't find solutions. There aren't any to grab onto. So you've got to be realistic in your fitness approach and constraints. You can't over-constrain the entity. If you over-constrain it, it won't grow. It will be returned to memory before it has a chance to grow. By using this expectation approach, we can leverage on this interaction between these various metrics. Here, for example, we see the effect of a system after just a couple generations. Notice that there's a drawdown and waviness in the net profit in the equity curve. But if we just let it run longer, the equity curve grows to a higher net profit, and the string of the equity curve tightens up and drawdown decreases, even though drawdown was not a direct fitness objective. So we didn't tell the engine, hey, give me the system with the best net profit over drawdown. We just said, design a system with the highest net profit, i.e., 1 over net profit becomes the error. Higher net profit, lower error, straighter equity curve, lower drawdown. That's the interesting interplay between these metrics. We can also do some fitness games, where we can, for example, as the machine is learning, change something radically and destructively mid-learning by either injecting DNA or altering some other configuration in such a way that a higher level strategy and a simpler strategy emerge, and of course then exported to code. So there's, as Frank says, there's dissertations every time you run TSL, and this is all area of work that we're still working on. Okay, we're done. We've designed Trading System Lab, 9 languages, about 1 million lines of code. Took 2 companies, about 10 years. The engine's designed, it produces code, you stick code between in the OMS, EMS, through the exchange, the matching engine, and trades occur in real time. And it's not a leap to connect this dot here and have the machine learn to trade, export code, and redesign itself as it is trading in real time and the P&L emerges live. We call that learning on the fly. That's not a part of the commercial product of TSL at this time. That's called learning on the fly, but you can see that it's not that difficult to do. Okay, now that we're done designing the machine, we have to focus on data, because after all, garbage in, garbage out. So these 2 scatter plots show 100,000 matched pairs between training net profit and out of sample net profit. And it doesn't matter, this could be log returns, it could be some other form of normalized returns. This just happens to be raw returns, right, scatter plotted right from the engine. But this data runs from 94 to 2014. We used back OOS. It's running on the E-mini S&P 500, long short. It was a short run using only 5 GWI, using trade type 5, preprocessor 1, and FF1. Notice we have our own language here in Trading System Lab. We can share setups with users. We can, for example, one client will tell another client, go and try GWI 5, TT5, PP1, FF1 on the E-mini. You might get good results. So here is the same 107,000 systems, but this data goes back to 82. And you can see that the shape of the snowball here starts to get skewed to the right, which is what you want. You want the shape of this snowball to get skewed to the right. And if you do a better run, you get more of a cigar shape. These are matched pairs between in sample and out of sample, and this is what you want to see in the distribution plot that comes out of TSL. So we could reject the null hypothesis that the matched positive OOS against the in sample was purely the result of chance. For example, using the Wilcoxon. A quick word on slippage commission. I get asked all the time, should I start a run in Trading System Lab with slippage commission included? So it's not an easy answer. It's not an easy question to answer, and here's why. If you include slippage and commission at the beginning of the run versus the end of the run, you might be killing good systems before they have time to emerge. In other words, it's like the engine can't overcome that initial debit of slippage and commission. Whereas if you let it design without slippage commission and add slippage commission at the end, both of these are acceptable solutions with slippage and commission. You end up with a better trading system. So maybe modulating slippage and commission during the run, that might be better, we're not sure, but certainly the studies seem to show that add slippage and commission in after you're done with the design. Don't add it in at the start because it can seriously impact a good system and it won't have time to emerge to a great system. This system ended up being great because we added in slippage and commission after we were done. This system ended up being only good because we included slippage commission early. All right, probably the most important slide here is this one. How does Trading System Lab design good systems? How do we avoid overfitting the data? How do we focus on robustness? And these are most of the main ways. It's not all of the main ways, and it's certainly not all of the ways that are going to be in Quant Systems Lab, but this is a lot of them. For example, the forward and back OOS, we can walk in either direction. In other words, you may want to train on the most recent data, you may want to train on the older data. A run path log shows us how the machine is learning. This is a subset of the distribution, if you will. We want to see how the machine is learning. If it's learning generally very well, that's a good sign. If it's learning poorly and we get a spike of good out of sample, well, that's a bad sign, because that means that you may be tempted to choose a good out of sample that's a one-off, and that's nothing more than a curve fit and something that you don't want to do. You want to avoid doing that. So we have ways to avoid doing that. An unbiased terminal set is another way that we focus on robustness. In other words, our data preprocessor doesn't give bullish and bearish signals. It just says that the signal exists. For example, if you're trying to trade a counter-trending market on a up crossing moving average, a short moving average crosses above a long moving average, if you're trying to trade a counter-trending market, that signal that I just explained becomes a sell signal because the market counter-trends. It doesn't hold a trend. Whereas in a trending market, that signal that I just explained becomes a bullish signal. So we don't say if the inputs are bullish or bearish. We just say that they exist in time, and the engine can determine how to use those or not use those. The system is multi-run, which means that it can crawl up a global optimum or help crawl up a global optimum because it stops and restarts on its own many times, re-randomizing the initial material. So it's stochastic, it's metaheuristic, it's evolutionary, and it's multi-run. It starts from a zero-point origin. In other words, we don't start with a trading system when you hit go in TSL. There's no trading system predefined. It's all random. It's all a random system. Parsimony pressure, I already explained that. We can reject the null. I've already talked about that. Trade to parameter ratio is important because we want a system that has a lot of trades and very few parameters. We like to see at least 100 to 1 trade to parameter ratio. So if you've got 1,000 trades in your system and you've got 10 parameters, well, that's a 100 to 1 trade to parameter ratio. We like to see 100 to 1 or greater. Now, many of these systems that TSL creates, we see 200, 300, even 600 to 1 TTPR. So that system has a very low chance of being overfit. More data is better. We talked about that. We can always do a second blind test. In other words, we can hold out some additional data in kind of a pseudo sequestered data testing, although this is not perfect because I might be biasing. I might be injecting some developer bias into it without really even knowing that. Sequestered data testing is clearly the best because there's no way that you can cheat on sequestered data testing, since the data didn't even exist at the time that the trading system was designed. So we've interfaced with a number of platforms out there. At the mid-level, of course, the TradeStation and the multi-charts. We produce easy language code. So TSL, and the example I'm going to run today is for TradeStation. But we can also, through translators, produce the core engine in C# or other languages. We've got a blocks client who's an expert on trading blocks, for example. One of our first clients interfaced with WealthLab script. And of course, there are others that you can interface with through a DLL. We give the shell to allow the algol to be dropped into a C++ Visual Studio DLL that could be hooked in to various OMS, EMSs. So we try to be platform agnostic. Obviously, many of these are not that far along. We spend most of our time focusing in the more popular platforms. Obviously, we have a business to run. So, 3 steps to designing a trading system: pre-process, evolve, and translate. Those are the 3 steps. A beginner can do them. How do we know this? Because we have beginners as clients. All right, in summary, there's the world's getting smaller and more interconnected. There's a lot of intermarket correlations that are cropping up and increasing. You never know really what your co-holding risk is going to be. It might be much more correlated than you thought. Markets keep changing. While systems are not really adaptive enough, so how do you deal with this? Well, you create more systems. What would you do if you had access to an unlimited stream of equity curves? What would you do with an unlimited stream of systems? Returns seem to be elusive and require deeper mining, and you really don't know what your unknown unknowns are. And money managers are very slow to adapt to this. I've seen this. We've talked with money managers who are losing money, and they just can't seem to wrap their head around machine-designed trading systems. I think that's changing, but there's still a lot of old thinking out there. We've got some major projects going on. The biggest project, of course, is the TSL Next Gen, the Quant Systems Lab, codenamed LAIMGP, or TSL-V2. That's our biggest project. That is a very powerful platform, a leap above Trading System Lab. And unfortunately, I'm not talking much about it because of competitive reasons. So what's the bottom line? There's really no way that a human can design as many unique and novel trading systems as TSL and then write the code. You just can't do it fast enough and have as good a quality of systems. Please join our Meetup group on our website. Our website is tradingsystemlab.com, and here's the website. Here's my phone number. Let me see if I can bring over. Yeah, here it is. Here's the website. Here's my email. Here's the phone number. Here are all the flash demos, and we've got a lot of them. Some of them are for clients only. If you send me an email, I will send you some of the passwords to some of the flash demos. You'll need WinZip to unzip them if they've been protected with a password. Otherwise, Windows Unzip will zip them. They are .exes, and if you don't want to run a .exe, well then I don't know what to say, because that means you can't run anything, because everything's a .exe. Under literature, you've got access to a bunch of peer-reviewed white papers and some other papers, including Frank's thesis, our latest, the special report on robustness, and an older Meetup. I haven't put the latest Meetup in there yet, although you pretty much just got it there. There's some technical white papers as well up there, and we've got some example systems here that can show you the equity curve. These are fairly old example systems. Let's see, and that's it. So there's also some links to the Futures Truth reports, and there's a 6-minute, if you only have 6 minutes, you can watch the executive brief right here, where we go through all 3 steps: pre-process, evolve, and translate, and a brief introduction in 6 minutes. So if we have time, I can do a quick demo. Of course, it will be a live demo, and you know, anything can happen on a live demo. This is when things happen that have never happened before. But before I do that, why don't I take some questions right now, Brian? Do you think that's a good idea?
Yeah, of course. I had a question from Paul. Let me open up the channel. It's probably easier for him. Give me a second, Paul. Paul, go ahead.
Hi. I have a few questions here. First of all, are you based in New York or are you based in California?
No, we've got traders that are based in New York. I'm in Silicon Valley.
Okay, you're in Silicon Valley. Okay, is your system accessing any sort of cloud technology? You know, like Databricks or, you know, cores in the cloud or anything like that?
Without going into work from the long answer is yes. The shorter answer is no. The base TSL package can run on the cloud. If you would like to run it on a dedicated box, we can arrange that. If you would like to leverage many core, we can arrange that. The base product that comes out of TSL is not resident on the cloud. It is resident on a box, preferably a high-end i7.
Okay. I'm assuming that the package is around 20,000 a year. Is that what
pricing's up on the website, and we've got ways where you can get TSL at no cost, and we have full price packages. Please go to the link pricing right here. I'd rather not talk about pricing here on this call. If you have any questions, send me an email. But we do have ways to have you get the package for a lower cost or even free if you meet certain criteria.
Okay. The other question is the program that you're offering, is it pulling the actual market data, or is it that an individual, let's say as a prop trader, has to also pay for market data fee?
Okay.
You get market data fee through your system?
We are not data providers.
Okay, so it's your system, you know, your system plus you know, the cost of the actual market data.
Right. For example, many of our users use the TradeStation, multi-charts, blocks, CSI data, or Deltix data, Deltix World, OMS, EMS. So these brokerage platforms provide their own data, and this is very adequate to do the work with TSL.
Right. Now, to your slide on prediction approach and expectation approach, I thought that was a good slide. I think a lot of people do the prediction approach. Now, did I understand you right when you did your webinar here that the system is 100% expectation approach?
Essentially, I cannot really. There is no supervisory signal, so we really can't say that we're predicting a variable. Although one could come up and say, well, you're trying to design a trading system that's targeting Sharpe ratio, so in effect you're trying to find the best trades over the entire time series. So in a way you're predicting, but it's not the prediction approach. That's my point of this slide.
Well, right, okay. Because what we noticed in our AI research is that we're seeding the SDR using the predictive approach. When we turn the algo off and use what we call a neurotransmitter of the emotional state of the AI and reference pattern recognition of the SDR, we're using what you call expectation approach. So I just thought that was an interesting slide there.
Paul, right?
Yes.
Yeah, Paul, I prepared this slide in about 3 minutes after I kept getting questions on, well, what do you mean by the expectation approach? I don't understand this thing, because we're a machine learning meetup group, and we're all talking about prediction here. So what do you mean by this? So I said, okay, enough. I'm going to create this slide and eliminate the prediction box. Now, with 8 outputs, we can certainly blend these 2 approaches so that we can combine the prediction approach and the expectation approach. Right. There's not a problem with that, and that's also another area of research. And for me, of course, everything's open source, so I can do, I can create a combination prediction model and an expectation model. In other words, I can take say 2 of the outputs and use those as prediction and modulate those predictions with an expectation.
Right. My dissertation was using something called receding horizontal control and stochastic programming, and it seems that there's similarity. It's not exact, but there seems to be some similarities in some of this in the method. But
well, if you Google simulation-based optimization, you run across this kind of concept. But what's fascinating to me, Paul, is that in 2005 plus or minus time frame, when I pretty much gave up on the prediction approach and directly connected the simulation environment with the learning machine environment, and then I kind of went back and did some research into some peer-reviewed work and read a bunch more books. I really could not find a lot of interest in this area. I'm not sure why, but in our case, it's proven to be very, very successful.
Yeah, no, I think from what you've shown in the webinar, it's a very, very powerful system. I have one other question. I think it was on, okay, the slide, the fitness game slide that you had. I'm curious to know, what did your system evolve, especially in the S&P 500, during the Lehman crisis? Specifically, the market was somewhat trending down before Lehman happened. Then the massive event, and then the huge mean reversion that starts in March.
Well,
of 2009. I'm just kind of curious to know, through what you experienced in TSL, what was it learning?
Okay. All right. This data goes. Can't really read that myself, but we released this data. We released these systems here, and they performed wonderfully. Let's see, what year was the Lehman crisis?
Lehman took place. It started late 2007, and then there was a big crash. It was in 2008.
Right. Well, we designed those systems in late 2007, and then submitted them in late 2007 for tracking beginning January 2008. So as that whole market crash was happening, we were having these systems being tracked by Futures Truth, and they performed marvelously well.
Okay, so see, what you're saying is it learned how to adapt to a massive sell-off.
Prior to the massive sell-off.
Prior to the massive sell-off.
Right. Remember, you're not allowed to retweak the system during the competitive period.
In this competition, I thought you had a slide that said 25 different types of trades. Something like that.
Yeah, but wait a minute, just so that I'm clear here, you cannot change the system when after the competition phase begins.
No, I understand that. I understand.
Well, okay,
So-
and right, so it's static code, it's simple code. In this case, it was only, the core logic was only maybe 10 lines of code.
Okay, now in the style of trading that this machine was learning in,
Yeah.
was it doing dynamic hedging?
No, there's no dynamic hedging going on. In this case, it was all, the competition has their criteria. It's one contract. You can go long only, short only, or long both. It doesn't matter how long you're in the market. You can be in the market 100% of the time or only 1% of the time. It's directional trading strategy, constant number of contracts, and the strategy has to be fixed and cannot be changed. Now, if it was a different kind of a competition, we would have
So
entered into that competition.
I suspect what you're saying is that if I took the first 10 days of the actual crash, I suspect that your algorithm was doing very poorly.
I'd have to go back and look.
But I suspect that after that 10 days, your algorithm really did well.
Yeah,
Because it must have needed some time to do confirmation that it needed to sell and change strategy and go short.
probably. I mean, a shock event that many sigma.
Right. Right. That's my point. Is that this is where I think a lot of research in AI, narrow AI for trading, needs to take place. Is these fat tail event type situations, and how to reduce the shock on the portfolio. And I guess the only way to maybe do it is to have more advanced risk management type systems to, as a circuit breaker, and maybe that's part of your algorithm. I don't know. But my gut feeling, from what I've seen with algorithmic trading, dealing with just before the Lehman event and through the Lehman event, and how illiquid the markets were, and how crazy the volatility was, and how correlations were breaking down or magnifying, that the whole system was kind of dying.
Right.
The economic system was dying. And if you have something that is learned, in a somewhat calm, serene kind of environment, relatively, that phase transition to total chaos, I would suspect that there would be massive losses in the position.
Well, it didn't show up. We didn't see any massive drawdowns in the trading system. It was either suffering a normal drawdown or no drawdown at all. It performed, and it wasn't just in the S&P. We also had bonds and an energy system as well being tracked, and they were all performing wonderfully well.
Right. So in your AI or your ML algorithm here that's developed, is it evolving a system where it's saying, you know what, if the market goes down more than 3 or 4% cut off?
No. Look at it this way. We looked through the 87 crash, the 93 crash. We saw enough market meltdowns in the data from 82 through 2007. We saw enough movements and craziness, and also the DNA that we use is very adaptive. So even if the movements were not within the range of history, the DNA was adaptive enough to allow it to expand into the range that was upcoming. But we could go on and on.
Yeah, exactly.
The bottom line is it performed wonderfully well through the market crash and is still rated #1, still top performing 7 years after its design, which is remarkable.
Well, I'm sure that you rate very high. That wasn't the issue. But if everyone was doing poor during the Lehman crash, then you still rate really high. I mean, so it's all relative. I have a hard time believing that a machine algorithm that doesn't have some massive risk management capability, that first 10 days of the crash didn't lose massive amounts of money.
Well, what if you were on the right side of the market?
Well, that's possible. That is possible. But I'm assuming, I'm assuming that most people would have thought. Again, I'm thinking as a trader, using behavioral finance and using technical analysis. And you're right. I'm a little biased to maybe the old way versus the new way of. Because I've traded in that environment, so I was. I understand what it means, what volatility means.
Right.
I was in it.
There is something.
So maybe I had, maybe I'm a little bit too skewed, from that, that combat, environment. But it just seems really odd to me that a machine algorithm that first 10 days, maybe first 5 days, would have been able to do, really well. Well, everything, it seemed, at least, the perception seemed as the whole world was falling apart.
Well, Paul, I really can't. I have to go back and actually look at the trades during those 10 days. We're talking about data from 82 to 2013 here, or 2015. 10 days, a 10-day move, a 2-week, a 2-month time frame is just not, in the scheme of things, just not all that important. We're looking at the overall progression of the trading system. We want to see it keep making new and higher equity highs as it's moving, not just the performance during any one particular type of a crash environment. Now, we have been approached by people that want to design crash-only systems. In other words, they wanted to...
Right, exactly. And that was the point that I'm making, is that if you have a system that can predict a phase transition, then you can activate a dynamic hedge.
Paul, can we... I got other questions coming in as well. Before we lose other people, do you want to proceed with your demo, Mike, and then we could take a pile of questions at the end, or how do you want to do it?
I could take another couple questions right now, since we spent probably too much time on the Lehman crash. Okay,
well, I got 4 other questions. This is from Ron. He already typed it up. He says, he asked, where on the site do you explain about your 25 trade types? If you want to just put that in the chat box for everyone to get access to.
We don't explain all 25 trade types in detail. Obviously, we don't want to give away too much information, but if you go to the, first off, if you go to the flash demos and start watching some of these demos, you'll see that when I'll do a pull down of all of them. I'll do it here today for you as well, but we don't, for example, give out a user guide. The user guide is confidential.
Okay.
Okay.
Got some more questions. James asked, are you familiar with the Gene Scher's book, Handbook of Neuro Evolution through Erlang? If yes, do you recommend it?
I am not familiar with that, but there are people in our Meetup group who are writing some code in Erlang and other languages that are that I'm not as familiar with. So no, I'm not that familiar with it. Would you send me the title of that book again? I'll take a look at it.
Sure. Okay, James, if you want to send over an Amazon link for Mike to check out, and just put that in the chat box. Edwall asks, are you going to make your slides available at all, or can you?
I'm going to put this or a similar PowerPoint up here under literature, and I'm sorry, I've been remiss. It will go up here. So okay. Check back maybe later this week. It should be up here.
Okay, and then Eddie asked, is there a data size limitation?
Yeah, 500,000 data points is our current limitation for single market systems.
Okay, Dave asks, with a follow-up, I have an existing strategy with about 10 parameters and would like to optimize a specific frequency during live trading. Is this possible with TSL?
Okay, you want to do live trading, intra-trading, optimization of a trading strategy while it's trading, or
I can bring in Mike via voice, or I'll just repeat what he just said. He said,
yeah, bring him in by voice,
okay,
because I'd like to know more, because I think he may be talking about a custom preprocessor, and the answer is yes, if that's the case.
Dave doesn't look like he can make himself available. I can't. His mic doesn't seem to be available. But I'll just repeat the question for you. So he says, have an existing strategy with about 10 parameters that I would like to optimize at a specified frequency during live trading. So I'm interpreting that, is your system able? I mean, from my perspective, the answer is yes, but it sounds like what he's asking is, while you're running it through the optimization phase, I guess what he's trying to see if he can be able to apply a live trading system in parallel with the results that your system would have, as well as probably running it with live data, if that makes sense. I'm hoping I got that right. Follow up, Dave, if I'm wrong.
Yeah, okay, let me take a step back. Here's what we can do. If you have an existing trading system and you would like it enhanced, TSL can do that. However, it may change your trading system remarkably. All you would do to do that is you would take your inputs, your patterns, your indicators, whatever else you have, and if you'd like, your actual trading signals, either as price levels or Boolean signals or whatever, and integrate them either completely or partially into our existing preprocessor, and then run Trading System Lab. We call that a custom preprocessor, and if you go to our website, you can watch a flash demo on how we do that. It's demo number, there's actually 2 of them, demo number 42 and demo number 37. So these 2 demos, 37 and 42, custom preprocessors, watch both of them, and the password for those 2 demos is right here. It's core PP11, C-O-R-E, Papa Papa, the number 1, the number 1.
Okay.
I'll leave that up there for a while.
Okay, and go ahead.
So that's what we can do with TSL. Now the rest of what you're talking about sounds like some kind of a blend of on-the-fly learning. I don't know. And the answer is probably no with the base version. But anybody can do this with the current version of TSL. And we have a lot of clients that do experiment with the preprocess.
From what he's commenting, it sounded like I was on the money, and he says, thanks, awesome. So sounds like we answered his question. Now, just so for you, Mike, James has put the link on the Springer.com of that Erlang book. So you can just go in the chat box and grab that if you want right now.
Okay, excellent.
Okay.
All right, any other questions?
Yeah, any other questions? I'm sure Paul's got quite a bit more. We'll leave that to the end. Anybody else? If not, I guess we're down for this demo.
Okay, let's do a demo then, and yeah, thanks for the link to the book. All right, so 3 steps to designing a trading system in Trading System Lab: pre-process, evolve, and translate. Pre-processing produces the data that's consumed by TSL, all the variables, all the normalizations, all the patterns, they're all extracted out for you. We've got all of our preprocessors all prearranged. You just have to run them and they're done. It also produces the theoretically perfect equity curve. So let's go ahead and, it's already an hour and a half into this. We'll just do one quick demo on the E-mini S&P 500. So here's the E-mini S&P 500, and the first step is the preprocessor, is to run the preprocessor. So let's turn on the preprocessor as a trading system. We have a trading system that's actually a preprocessor in TradeStation to make it nice and easy and convenient for everybody. So you just run this, and it takes about 30 seconds or so to run on this data. And what it's doing now is it's producing all of the flat files that are needed by TSL. It also produces, when it's done, it puts arrows on the screen, and that produces the theoretically perfect equity curve on the E-mini S&P 500. So this is a perfect trading system. It's 100% accurate. It traded one contract, made 2.7 million from 82 forward, and so it had no closed trade to closed trade drawdown. And this is the equity curve. This is the 96 knee. This is 1996 right in here. We call that the 96 knee. And notice it's not a straight line. All right. So that is step number one. We'll turn off the preprocessor. That wasn't too hard, right? So now we'll go to Trading System Lab, and we'll bring up the latest project that we've been working on. And here's the home screen of TSL, if you will. And on these graphs here will become the equity curves as they emerge. So the training and the validation are considered in sample. This set here is considered out of sample. This will be the out of sample equity curve. And this is everything combined, in sample and out of sample. So in order to run TSL, we need to configure the simulator. The simulator is configured here. I've already pre-configured some settings, so I'm just going to quick load those parameters here and go over them with you. So we are going to target net profit as the fitness function, like what we talked about, although you've got all of these fitness functions that you can target. If we have time, we'll do a second run. I'll show you how we can improve the system by using a different fitness function. So there's our 40 fitness functions plus our external C++ DLL that you can program for your own API work if you're doing that. All right. So there's our fitness function. Here's our trade types. Here are the 25 trade types that I had a question on. So you can make a screenshot right now if you want to. I'm not going to talk about all 25 of those trade types, but you can see there's a lot of complicated trade types. There's multiple trade types in there. For example, this one here actually designs two systems simultaneously. Both enter on a limit. This one designs 4 systems simultaneously, a limit and 3 different stop type systems all in one system. So I've got 8 outputs, right? I could design 8 different trade types all simultaneously in one run. So we're going to use trade type number 5, which is enter on a limit, which is a common entry tactic. I'm forcing at least 200 trades to eliminate trivial solutions. I'm going to go long only. I'm not going to use any stops or exits. Our exit will be our exit. It will exit when it exits. When you're done, you can certainly add a catastrophic stop loss if you want to, or you could re-optimize old-fashioned, old-school, another stop loss, or you could run the GP and let it configure its own stop loss or its own limit target. We're not going to do that. We're also going to use constant dollars, and I'm going to assume that my account size is based on 10,000 points. Right now, the S&P is what, about 2,000, so that'll mean we'll be trading about 4 or 5 contracts right now on the E-mini S&P. We're going to use prior early 10% OLS, and I'm going to use the number 4 preprocessor. You've got 5 preprocessors. They're all customizable per that flash demo that I just showed you. But we're going to use the mixed numeric preprocessor. So I'm going to apply the settings. Here's EVORUNT, by the way, if you want to run EVORUNT. And notice we've got a lot of tooltips that pop up that explain what to do. So you just basically start at the top and work your way down and around in a U-shape, configure the simulator. Now notice there's no genetic programming goo here to be configured. The GP's all configured up here. Here, for example, is where you can configure the machine code instruction sets. You can drill down to the individual machine code instruction sets, the program size, the search operators, the genetic programming material, as well as parsimony, pressure, etc. So this is where you drill down to the genetic program, all right? So the GP is configured here. I'm only using 20 as my GWI too, so we're going to get systems quickly, but they're not going to be the most optimum systems, but hopefully we'll get systems out in just a few minutes. So the simulator is configured here, the GP is configured up there. We'll apply the settings, and let me make sure my password remains, yes, okay, and begin the run. So that's it. As you can see, it's pretty easy to begin a run in TSL. That's why beginners can even do this, because all they have to do is learn this one page of simulator setup, and it's not that complicated. We have ways to save settings if you want to. It's not that complicated, and immediately you can start designing systems. Now, in 30 seconds, we've got a lot of systems that have already been designed, and here is the latest and greatest system that has come out of the engine. So it's still getting better, and it's currently trading 4 contracts. So it's a constant dollar system, and it just keeps getting better. Now behind the scenes, there's a lot more updating that's happening, but we're only seeing the latest and the greatest that's coming out. We're not seeing that entire distribution of all of these systems that have come out. We're only seeing the latest. When systems are ready, the buffer will push out systems. This is a proprietary algorithm that does validation tests on the systems, and I'm going to configure this right here so that you can see what's happening. We're up to 20 GWI, and boom, systems are all ready. So this is not the best system, but it is. We do have systems that have been pushed out by the systems buffer, but I'm just going to let it run a little bit longer. And while it's running, in the background, it keeps designing new systems using crossover, reproduction, and mutation, and it's trying to find solutions that are better than this best one that's come out. So we're just going to let it run a little while longer. As a matter of fact, I can take a question. We're just going to wait for another minute or two and see if it gets better, because we've only put 2 minutes of work into this so far. The last step will be to translate this over to the OMS EMS and get it ready to trade. That only takes about 30 seconds. So I can take another question while it's running if you'd like, Brian.
Anybody got questions? Just type it up in the chat box. Paul?
Yeah, I have a question. Yeah.
Go ahead.
What's preventing the system from converging to a local minimum?
Yeah, multi-run. So what happened here is we've got 2 runs that have started. So we're on our second run. All the genetic programming material has been re-randomized fully. In other words, the run has been restarted completely, and this happens over and over and over again. After NGWI, the program reruns, re-randomizes all of the initial criteria, and let's see, I'll show you that right here. So this is what you can select to re-randomize. I've got a lot of it turned off. There we go. We just had a little update, so it did find a better solution. But Paul, this is where you configure what gets re-randomized.
All right. So my research in complexity science and agent-based modeling. This is some of my pre-dissertation type research that I published. The question I have is, even though you're using a GA, it almost seems as though there's some agent-based modeling going on.
It's not a GA, it's a GP, but you're on the right track.
Okay, but would you classify the system as like an agent-based modeling system?
Yeah, I would, and that's a great question. I wish Frank was on the line. Give him a call. You can talk with him about this approach if he has time. That's kind of a philosophical question. I mean, from a trading standpoint, it just works.
Right.
I got another question from Ron. It's an excellent question. He asked, have you tried the system against predatory hedge funds in a dark pool, meaning those that use spoofing or layering?
Yeah, that's a great question. If you have access to that level of data and want to work with us in some of those research studies, give me a call. The short answer to your question is no. The long answer to your question is I do have people that are interested in that, but of course we do have the business aspect of it. It's not cheap to work in that area, and it would also pull us away from some of the current work that we're doing. So if we tried to get some projects going with some of the big players in this space, and they again, we found some difficulty in having their head wrap around this kind of science. They were more interested in still trying to find faster ways to get ahead of everybody on spreads.
Not sure if there's any other questions. Looks like you could run that demo, that simulation for months and months.
Right. You can just let it run, and it'll continue to try to find better solutions. All right. So we're going to go ahead and stop this run and translate it over to TradeStation. So here's a list of the best programs that have come out of the buffer. These have passed all the internal validation tests. We'll double click on one and remove the introns by simplifying it. And wow, this algorithm just simplified down to 3 lines of code. And hopefully this will translate okay. Might be something wrong, but so that one simplified down to 3 lines of code. Now, what did I do? Well, I clicked on this, and we had 21 lines of code, but most of this was bloat. Most of these instructions were introns, which are a remnant of the evolution process that basically don't do anything. So what we have is we have an algorithm to remove that bloat. We click on this algorithm, and it cycles through all of those lines of code, looking for and removing them slowly, one at a time, looking for exact I/O. If the I/O is the same, the code is bloat, and it's eliminated from the program. So let's give it a try and see what happens. Let's save this C code. And now let's translate it again. All of these steps are covered in my demos on my site. We even have some translation failures from time to time. So there it is, and now it's translated over to easy language. So here's the core code of easy language. We'll copy that to the clipboard and paste that where it goes in the TradeStation easy language code, right here. Verify it, and down here in the lower right we can see that it'll verify. There, it's verified. And now we go into TradeStation and turn on that system and set all of our inputs to make sure that they're set correctly. I'm just going to check them all here real quick, make sure they're okay. And that looks all right. Okay, so we'll turn it on and run it. And unless I screwed something up, which is possible, we should get a trading system come out of this. And this equity curve here should match this equity curve here, and it looks like it does. So what did we, let me reshape this a little bit. There and there. So it looks like it does match that equity curve. So what did we do? In 6 minutes of runtime, we designed a whole lot of systems at a very fast rate. We stopped the run and exported out 4 individual strategies, which by clicking on them and simplifying them, we reduced them down to a very simple program. This one here has 6 lines of code, but only used 2 inputs. Well, this is exactly what we want, because in the system that we translated, we only had 2 inputs, yet we've got 800 trades. Well, that's a 400-to-1 trade to parameter ratio. So we designed a marvelously simple system that currently trades 4 contracts. Let's see. Yeah, it's currently trading 4 contracts, a decent equity curve, a lot of drawdown in here that we can get rid of. I'll show you here in a minute. I will get rid of a lot of these issues. And we translated it over to TradeStation, and it is ready to trade in TradeStation. Now let's go back in and see if we can improve that system here. And EVORUNT would probably be a good place to segue into to go ahead and run this, but EVORUNT takes a little longer, so we're not going to do that. We're just going to try something else here. We're going to quick load those same settings. I'm going to still use my $10,000 or 10,000 point account size, only this time I'm going to configure for MAR. So I'm going to try to design the system that's got the greatest MAR ratio, and I think I have to increase that to 300. Let's see how that goes. All right. So I'm bringing up the minimum trades to 300. We're using MAR ratio as the fitness function. Enter on a limit. Preprocessor 4, back 10 OOS. And let's design. So this is a laboratory, and it does allow you to play with approaches using EVORUNT, using other tools, modifying your preprocessor, ultimately trying to design a better trading system. So in this case, the machine is targeting not just pure raw net profit, it's trying to find a good trade-off between net profit and drawdown. And we should start to see a smoother equity curve. Now, sometimes runs can go bad, and it just can't get over some initial criteria. Remember, this is non-deterministic. It's a non-deterministic process. It's not like running an optimizer. It's stochastic, metaheuristic, evolutionary, and non-deterministic. So it looks like the equity curve is getting a little straighter here. The one thing that I noticed when I ran this earlier was that the profit to drawdown starts to increase substantially higher, and profit factor starts to get higher as well. MAR is already approaching 3. There was just another update. Let's see what happened. Yeah, MAR is now over 3. Profit factor is over 2. Percent profitable is 70%. Profit to drawdown is 17 to 1. We'll just let this run a little while longer, and I can take another question.
Anybody? Sure, Paul's got a question. If you're out there.
There, it just updated again. If you saw that.
Yeah.
Paul's got a question.
The question I have is, if you took the mini S&P 500, if you take the mini S&P 500 and you ran this, and let's say you ran it for 1 full day, and let's say you actually, okay, but all right, but just follow my logic here. If we took the mini S&P 500 and ran this for 1 full day, and we took and the standard contract for the S&P 500 and ran it for 1 full day, would your algorithm for each be very, very similar?
Okay, I think your question was, if you took the E-mini S&P 500 design systems, and you took the full-size S&P 500 contract and design systems, would they design similar systems?
Yes.
Yeah. Yes, similar, but similar needs to be defined. Now, one thing I didn't say, and thank you, Paul, because in the Futures Truth tests, the full-size S&P contract is going away, right? It's basically gone now. During this transition, of course, from 2007 forward, the S&P, the full-size S&P was still pretty strong. So as the full-size went away, we didn't want to just throw away these systems. So we told Futures Truth to go ahead and just run these systems on the E-mini. And here they are. This is how well they've done on the E-mini S&P 500. They're still very highly rated. However, if you design the system on the E-mini versus the full size, those systems will be slightly different. And if you carefully plot, and look at the descriptive statistics differences between the full size and the E-mini relative to gaps and movements, etc., you will see differences, and those subtle differences do make a big difference in the design of systems. So if I'm designing a system on the E-mini, I'm going to use the E-mini data. If I'm designing a system on the SPY, I'm going to use the SPY. I'm not going to take the cash S&P and try to design a system on that and use that to trade the E-mini S&P.
Right.
Okay, so here we are. We still haven't exported any systems, but look at this this profit to drawdown, 41 to 1. Percent accuracy, 77. Clearly, the machine loves some of these other objective functions. In this case, MAR ratio. There's other ones too. There's this custom FF API that we have. Clearly, it likes these other ones, and we could have chosen another one and gotten stunning results as well, like net profit over drawdown, net profit over standard deviation of return, etc. You can even target directly profit factor or directly percent accuracy. If we target directly percent accuracy, Paul, we've kind of degenerated down to a predictive model, haven't we? So let's see, we still don't have any systems out. Sometimes some of these other FFs do take a little bit longer to generate systems, but all we do is we wait until our appropriate number of GWI, in this case 20, is reached. Systems will be pushed out. We'll get the C code, we'll translate it, we'll drop it into TradeStation, and it'll be ready to trade in TradeStation. That's the workflow. Isn't that simple?
Yeah, I got a couple questions here if we got the time, if this is still running through its process here.
Yep.
Yeah, this is Dave. So I keep looking at, first of all, I keep looking at the systems evolved. It's a pretty high number. A system presumably is just a trading strategy. It could be simple, like a moving average crossover, or you could have other indicators in there. But is that how you define a system as it pertains to this tab here?
I'm not sure I understand your system. Every time a system is evaluated at the machine code level, the system is tested against and compared to the best system that has been trapped at that point. And
right. Yeah. So the system is basically it's something that's generating a buy and a sell signal, right, or an exit signal, right?
That's correct, and then tested in the simulator. That's right.
Okay, all right, and the genetic programming actually designs that system from scratch, or is there like a universe of systems that you have to pick from predefined in your core software?
Now remember, we said earlier that there's no predefined solutions.
Okay, all right. I find that very interesting because that could be almost nearly infinite number of possibilities, I guess, for the number of possible systems that it could find.
Of course there is. If you just can't take the number of inputs and signals and multiply them together, and that's the deterministic number of possibilities. If you take a string of inputs and add them and multiply them and divide them and raise them to the power and take a sign and then invert the whole thing, you have a virtually unlimited potential number of systems that you can look at. But this is an evolutionary algorithm. It's testing those systems and producing offspring, and then testing those systems. And if they're no good, they're all erased and returned to memory.
Right. Okay. Yeah. No, that makes sense. And thank you for explaining that, because I have to let you know where I'm coming from. I use NinjaTrader today. I have a really good strategy that consistently needs that optimizing on it. And you know, NinjaTrader has its own genetic algorithms in it just for optimization. They don't write code, they just optimize existing parameters. So what I find I'm doing constantly is optimizing for a specific data series, determining the equity curve on the outer sample data, which is the walk forward, and then you're trying to match that up. It's a very manual, arduous process. So this is what, yeah, you know where I'm coming from, right?
Yeah, you need that just. A genetic algorithm doesn't produce anything new. It only optimizes what you currently have. If you're using a GA to select rules, then you're effectively doing GP, and now you're no longer calling the GA a GA, you're calling it a GP. So I don't know how else to explain it. This is a genetic program, not a genetic algorithm. Okay, we just exported systems. Let's see. This is our latest and greatest. The profit to drawdown is 50-1. The profit factor is 4, and the MAR is 8. Percent accuracy is 77. Traded about 400 times. Here's the equity curve. Pretty smooth. Pretty smooth. Now, are you done? We only let it run for 9 minutes. Clearly, the client is not going to be done. He's going to want to tweak it. He's going to want to test it. He's going to want to do other kinds of stress testing with it. But that is the workflow involved in creating a system in TSL. We created this for everybody. Our belief is that we should use technology to make it simple and ultimately less expensive for the individual user. As I said, we've got a lot more behind the scenes than what you're looking at here. This is TSL version 1. It's way above anything else out there. We're rated #1 by Futures Truth. Thank you very much for your time. I think this is probably a good place to wrap it up, Brian.
Yeah, well, I don't know. Shalom, I got 2 more questions. Is that okay? We can get those answered in?
Sure. We've been going for 2 hours. My voice is starting to go out.
Yeah, no worries. I'll answer or ask the first question from Edwall. Are you able to adjust the tournament size?
What you can adjust in TSL are the population size, which is right here. That's all you're able to adjust. You're not able to adjust the way the tournament is run. You know, 2 entities competing against each other ultimately. So that's all you're able to adjust is what you have here. If you want to read more about this, or even download a free copy of the genetic program, go to RML's website, which is, the link is on our website, and you can download a trial version of their genetic program, which is right here. So go to their website here, and this is under Trading System Lab. Go to Associates, and it's the first link. Go up there, and you can get a free copy of the genetic program. Now, it won't look like Trading System Lab. It does predictive analytics, but if you want to play with that, go right ahead, or give Frank a call if you want to talk some other elements of machine learning with him.
And we'll just make this last question for Shalom. He has to be unmuted. Shalom, what's your question?
How do the sample space, the in-sample and out-of-sample spaces, how do they change as you construct more systems? How do they evolve?
Okay, are you getting into a cross-validation kind of a question?
Well, you see where it says system evolved over there, you're constructing more systems. You're up to 1.2 million and progressing, I believe, right? Up there.
Out of sample doesn't change. This is where we used back OOS as out of sample. So here is the out of sample results right here.
But no, my question is how many out of sample? How big is the out of sample space? How big is it?
It's 10. We use 10%. You can select whatever you want to select right here.
And how big is the total sample space?
It goes from 1983 to 2015. It's a total of 8,000 data points.
8,000 price points.
8,000 data points on daily data.
On daily. So in other words, if we're I'm just a little confused. If we're looking at the sample space as a time series, how many? If we put it in Excel, how many rows would we see?
You see 8,100 rows. Here's the data right here.
Okay. And you're using the same sample space on all these systems. As you construct 1.2 million systems, the in-sample space is going to be the same data set, basically, right?
Yeah, we're not rotating in sample and out of sample. I know what you're getting at, and in this version of TSL, we're not doing OOS and in sample rotation. We're leaving the OOS is purely OOS. It is not used, touched in any fashion whatsoever, other than your eyeballs.
Okay.
I get asked that question, and that's a great question. I get asked because there are packages out there that somehow will go in and touch the out of sample, either to set up some kind of criteria in the engine. We don't do that. That's a no-no. We don't touch the out of sample in any fashion. The in sample, in this case, from in sample goes from 86 to 2015. Out of sample goes from 83 to 86.
Yeah. I'm just curious, have you ever tried to do it like on tick data with 4 terabytes of historical data and see what would happen?
We have a 500,000 data point limit.
Okay. Why do you have that limit? It seems to be relatively low.
Seems to be relatively low, but when we start mallocating as many arrays as we need to do this, this is all vector-based simulation. It's not event-based work. So we've got some limitations. And remember, this original simulation platform was created 10 years ago.
I got you. Okay. All right. Thank you very much.
You're welcome.
Thanks a lot, Mike. I've already got one kudo from Dave. He was saying, in capital letters I might add, absolute fantastic presentation, definitely the best platform I've seen, and I've seen a lot.
Well, thank you very much, Dave. We'd love to have you as a client. You're seeing it as it is run. There's nothing. It is what it is. It's very easy to use, and this is why it's attractive both to beginners and a PhD.
And Shalom's thanking you, and James is saying impressive. Thanks.
Okay. Well, thank you, Brian, very much.
Oh, no problem.
Again, please give me a call. You've all got my my contact information, the website, my email. You've got pricing. We'd love to have you as a client. Thank you all very much. I really appreciate it.
And it's okay to put this up on YouTube, no problem, right? Or we'll talk.
Obviously, take a look at it, make sure it's good. But yeah, I don't see any problem.
Okay, we'll arrange that then.
Okay.
Thanks to everybody. Paul's got his presentation coming up on Thursday on AI, on what he's doing as well. Thanks a lot, Paul. For you want to chime in, Paul, on what you're doing? I guess not.
This presentation is pretty good.
Okay, hey Paul, give me a call because there may be some overlap. We may be able to work together on something rather than each trying to recreate the wheel.
Right. Yeah, I'll give you a call and show you a little bit more details behind the scene what's going on with the SDR.
Okay, that sounds very interesting. Yeah, we might be able to use some of that DNA or something like that, or vice versa.
Right. Okay.
All right, everybody.
Thanks a lot again, Mike. Thanks everybody for coming out. Yeah, I'll try to get this up on YouTube as soon as I can. Yeah, everyone seems to love it, Mike.
Okay, great. Thanks a lot, guys.
Thanks, man. Have a good night, everybody. I'll end the recording and I'll shut down the presentation. Thanks again. Have a good night, everybody. Take it easy.